Generally accepted accounting principles GAAP in order to maintain uniformity and consistency in accounting records. Certain rules or principles have been developed which are generally accepted by the accounting profession. So in order to maintain uniformity, consistency, certain rules and regulations, principles have been developed by the accounting professions. They are accepted. That is called generally accepted accounting principles. These rules are called different names by different names such as principles, concepts, conventions, postulates, assumptions and modifying principles. Isn't it? So these all are same only, which is called as GAAP, generally accepted accounting principles, and this will be helpful for all over the world and whoever wanted to record the accounting transaction. All over the world it is accepted. For example, if in the future, if you have completed your CA, Chartered Accountant, you become a Chartered Accountant. If you wanted to work all over the world, wherever you wanted to go, the same accounting rules and regulations only they will follow, which is uniformity, to maintain uniformity, and intra-firm comparison also is possible when we are using this uniformity. The term principle has been defined by AICPA. Can you remember this AICPA? They given that accounting definition, isn't it? Art of recording, classifying, summarizing, interpreting, analyzing, about that. A general, so likewise here the principle GAAP also given by AICPA. They only defining about this principle. A general law or rule adopted or professed as a guide to action, a settled ground or basis of conduct or practice. It is a settled ground, so very important, and basis of conduct, practice. So it is a constant one, and they are fixing it is the rules and regulations like this. The word generally means in general manner, in a general manner, pertaining to many persons or cases or occasions, many persons or cases or occasions. The generally accepted accounting principles refers to the rules or guidelines adapted for recording all reporting of business transactions, all reporting of business transactions in order to bring uniformity in the preparation and the presentation of financial statements, uniformity in the preparation and the presentation of financial statements. For example, one of the important rule is to record all transactions on the basis of historical cost, which is verifiable from the documents such as receipts for the money paid. This brings in objectivity in the process of recording and makes the accounting statements more acceptable and various users. So what they are coming to say here, actually, if for example, they have given clearly in the example, one of the important rules is to record all transactions on the basis of historical cost. So whatever the cost it is, we are taking the historical cost of the base one. With the help of that, we are recording all the transactions, and it should be verifiable. Whatever the transaction or entities or entry you have written in the account books of accounts, that should be verifiable in nature. In the future, it should be verifiable, isn't it? So verifiable means the documentary evidence are very important. It is objectivity concept. By chance, if any customs authority or tax authority from government side, if they are asking some evidence for the transactions, we have to be ready to show the evidence transactions. For example, if you are buying any products from the stationery shops, else some other shops, grocery shops or departmental stores, they will give that bill, isn't it? That bill is evidence for the transaction. If you are purchasing, if you are buying 10 rupees worth of pen from a stationery shop, instead of that 10 rupees, that product you are giving 10 rupees, isn't it? So they will generate the bill. That bill is the evidence for that 10 rupees you paid to them, isn't it? So when you are writing in your petty cash book, in the business manner, I am saying, now you are students, so you cannot do this and that, but in the business transaction, even single rupees will be accounted. So they have to show this all the evidences, that is objectivity in nature. So they are setting rules and regulations that should be generally accepted by all over the world, and with the help of these rules and regulations only, we have to make all the transactions and enter all the transactions, and they are following that uniformity all over the world. And preparation and presentation of financial statement, it is very helpful that the GAAP is and with the help of example they are coming to explain us like which is verifiable from the documents such as cash receipt for the money paid. If you are paying money, cash receipt is very important. That is brings in an objectivity and evidence concept we will discuss later. So this is also one of the very important concept and conventions, objectivity and verifiable. All the accounting records should be verifiable. At the same time, we have to produce that relevant document. That is very important. And the process of recording and makes the accounting statements are more acceptable and various users. See, whoever wanted to seek accounting information, they will expect this all. They will expect the financial reports only. But whoever wanted to do research and evaluate about accounting research, when accountant work is completed, auditing will be started. When accountant work is completed, auditing work will be started. The auditor will verify all the documents. That time he will check out that objectivity concepts, whether he is having perfect documents to all the transactions or not. So that is internal audit and external audit will be there. If a company having auditor inside the company as an employee, auditor is not an employee actually, he is a profession, but some companies, the biggest company will recruit some auditor. They are internal auditor. Internal auditor will check out all the objectives, all the objectivity, which means all the evidence. And when it comes to external auditor also will verify whether they are producing perfect evidence for all the transactions or not. So it should be verifiable and acceptable by various users. The generally accepted accounting principles have evolved over a long period of time on the basis of past experiences. So they are not giving instantly that principles to us. So they are evolving over a long period of time. So many years they are evolving. Then after that they have framed this generally accepted accounting principles, which is accounting rules and regulations. We can say concepts or conventions, whatever it is. It is a different kinds of names as we have discussed earlier. Usage or customs, statements by individuals and personal bodies, and regulations by government agencies, and have general acceptability among most accounting professionals. So it is general acceptability by most accounting professionals. However, the principles of accounting are not static in nature. It is not constant. Isn't it? So it depends upon the time, it will vary. These situations will vary. These are constantly influenced by change in legal, social and economical environment as well as the needs of the users. So it depends upon the users and depends upon social, depends upon economical environment, depends upon legal environment. This will be changed. It is not in static. These principles are also referred as concepts and conventions. The term is differing, isn't it? The term concept refers to the necessary assumptions and ideas which are fundamental to accounting practice. So the term concept means it is necessary assumption and ideas which are fundamental to accounting practice, which are based to accounting practice, isn't it? The term conventions connotes customs or traditions as a guide to the preparation of accounting statements. So convention means it is a guide, and it is customs, and it is traditions. In practice, the same rules or guidelines have been described by one author as a concept. So in practice, the same rules or guidelines, whatever it is described by one author as a concept. He is saying it's a concept. By another as a postulate. Another author is saying it's a postulate, and still by another convention. Somebody are saying convention, somebody are saying concepts, some authors are saying postulates. This at times becomes confusing to the learners. So all the learners are confused now whether it is postulates or concepts or conventions or set of rules and regulations or principles or guidelines. So it is confusing, isn't it? So in this situation, instead of going into the statements of these terms, it is important to concentrate on the practicability of their usage. Important to concentrate on the practicability to their usage, depends upon their usage. From the practicability viewpoint, it is observed that the various terms such as principles, postulates, conventions, and modifying principles, assumptions, whatever it is, etc., have been used interchangeability and are referred to the basic accounting concepts in this chapter. So in this chapter, we are going to discuss about the concepts, isn't it? So anyway, it's a set of rules and regulations, concepts, conventions, depends upon the authors, it is varies. But even it is confusing the learners, what depends upon their practicability and usage, let them take the meaning it is. But in this present chapter, we are going to discuss about the set of rules and regulations is the concepts, that is accounting concepts, business entity concepts, money measurement concepts, going concern concepts, and dual entry concepts, periodical concepts, and objectivity or evidence concepts. So like this, we are going to discuss all the concepts.